in trade this morning. Wheat market, here's Chicago. Front month December at 5.29 1/4. It's a penny 3/4 lower. And we're watching hard red. It was higher across the board earlier. Now just December at 5.22, up 4 1/4. Cotton market, before we get to our guest, the March down 14, 64.57. Vice President, Blue Line Futures is Oliver Sloup. All right, Oliver, kind of threw out that Indonesia and biodiesel, and we're watching bean oil move higher. Is there any correlation there, or is it something altogether different?
I think there's a lot of different catalysts on play. I think, biodiesel is obviously would be a nice tailwind for the grain markets. I think right now a lot of the focus really is on the international trade and global trade, particularly with China in the soybean market. And then we're looking at South American weather and planting as well. They're about 99% planted in Brazil for the corn market, and about, I think it's 89% planted for soybeans. So that's going to be the big market moving headlines, I think, for the remainder of the year, which is kind of crazy, as you had mentioned, the last trading month of the year. But nonetheless, I think those are going to be the key topics. Now, we've had a little bit of a choppy trade here to start the week. We've seen a little positive trade, a little bit of a negative trade. March corn really sitting at a very interesting spot, 448.5. That was Friday's high, as well as the 200-day moving average. If the bulls want to take another leg higher and retest those highs from November 13th and 14th, we're going to need to see consecutive closes out above there. A failure to do so probably just keeps us in a little bit of a trading range. And speaking of trading range, I think the same could be said for the soybean market. 1135, 1137. That's kind of the top end of the range from a month ago, the first week of November. If we fail here, 1135, 1137 in the January contract, you're going to start to see what looks like a potential bearish head and shoulders pattern on the chart. So that's going to be significant. If the bulls want to keep this momentum going that we've seen over the last month, we need to see consecutive closes out above there. A failure to do so would be a little bit of a caution flag here in the near term.
Well, speaking of caution flags, are we ready to wave a caution flag over on the protein side when it comes to the cattle market? We had a big run on Friday. So how about we take a break? We'll come back and pick up the conversation on the livestock markets. This is Market Day Report. Oliver Sloup with Blue Line Futures. And Oliver, there for a while, I thought we might have been done with the cattle market. Live cattle futures over the past month down 9%, and then we move higher, up 4% week over week. So which flag are we waving today? Is it the green flag or the red flag, kind of like the Brazilian steakhouse? Do we want more? Do we want less?
Well, I tell you what, a week sure makes a heck of a difference. You and I last week at this time talking about lock limit lower across the board and not being a lot to talk about, although we did touch on the option synthetic markets last week, really not pricing in an extreme amount of panic considering things were locked. And then the volume traded last Monday as well, really, really high. 65,000 live cattle contracts traded on Monday, which is crazy considering everything was basically locked all day long. So to me, that indicates that there was somebody willing to pick up the scraps that other people were trying to throw in to the market. And I think, to me, that's kind of says that a lot of the excess froth and potentially excess margin positions are out of the market and we can get back to some sort of norm. And then on Tuesday, we also saw a podcast with Secretary Rollins kind of indicating, yes, the southern border reopening isn't a matter of if, it's a matter of when. But she went on to state that potentially that's a little further down the road than some people might be expecting. So a few tailwinds midweek last week propelled us back to gains for the week, which was very, very impressive. And ultimately, I think we could probably settle into what we would define as more of a normal trading range, albeit that might be $20 wide in the live cattle market. Looking at February futures, 210 is support, 230 is resistance. Right now, we're kind of smack dab in the middle of that.
All right. Oliver Sloup is with Blue Line Futures. Great to see you back here.